Okay, so let's take a look at the income statement that you're familiar with. Is the one with the blue bracket around. So start on sales, and then we have cost of goods sold reported. This gross profit is the first total. So this we talked about in chapter 5, and then there's many different operating expenses. After that, we get the second subtotal, operating income, which in this example would be $79,000. Okay. Now, other gains and losses. Remember, gain on sale of machinery. This is the topic we talked about in chapter 9. Trading long-term assets. Compare what we receive with what we're giving away. So gain and losses, $11,000 here. After considering all of them, now we consider this $90,000. We call it income from continuing operations before tax. Okay, so the blue part here is some new things that you need to know, starting from the green arrow over there. Income from continuing operations before tax. So all the incomes generated in public traded companies will be taxed a certain portion. In this chapter, we assume the tax rate will be given to you in the problem. In this chapter, we assume this state is 40%. Okay, so the $90,000 of income that company generated, 40% will be paid to state and state government, the IRS, and what's remaining is $54,000 that they're really keeping. Okay, so this first section here is called continuing operations section under income statement. We would have continuing operations section, and if company do have special items, then they have special item section. And then the last part is earnings per share section. Okay, so income tax here, again, the tax rate will be given to you. What you need to do is, when the problem tells you what is the net income amount for continuing operations, just times the tax rate and find out what's really remaining in the business, $54,000 after tax. For most of the businesses, they don't have those significant, for example, a natural catastrophe that happened, they don't have any terminated business segment, and pretty much this $54,000 would just be net income. Okay, if they don't have any special items. This year they did not decide to sell any segments of the business. They did not encounter any earthquake losses, hurricane losses, or anything in that area. And basically this will be pretty much the end of the income calculation part. $54,000 will exactly be net income. Okay, but in some cases, if they do have special items, then we also need to report this below continuing operations. Okay, this part is just showing you the calculation.